So, guys, welcome along to another mentorship session. It is Wednesday, the 16th of August. Now, so whoever was around on London session this morning, I mentioned today wasn't going to be the best of days to trade. When we get FOMC news at 7 p.m. UK time, it typically means you're going to get a lot of sloppy price action, and it's not going to be the best to read. If you're a beginner, it's going to be a complete nightmare in terms of looking for setups, things like that, possibly. Just because it's known to offer a lot of consolidation before we get a lot of news, which ends up taking price in further direction. So we'll obviously have a look at how certain things panned out. I'm going to go over some teachings on really the setup that I like to do. I've got a couple of setups that I like, a couple of models that I like, and I am going to introduce every single one of them to you on the course as time goes on in the next sort of couple of weeks. I'm literally just writing up the last parts of that course, and part of it's going to be the model that I'm going to sort of just go over with you again tonight. It's nothing new. We have done it before, but I'm just going to go over it again just for clarity, because sometimes when you have a look again and again and again, it just makes so much more sense. So yeah, we had that news event anyway. Looking at the DXY, what can we see? We can see price has really been pumping today. Now, we all talk about the power of three and how we like, if we're bullish, we want to be buying be below the open. And as we can see here, we had this wick come down and then price obviously expanded the upside. So we've had a bullish day on the dollar. And it's very clear to see that we are aiming towards these highs right here. That was the first realistic target. Obviously, if we start punching above those highs, I'm going to start looking here, and then I'm going to start looking here, and so on and so on and so on. But at the moment, there's no real suggestion to make me believe we're not coming for these areas. We've absolutely crucified this order block. We've disrespected it, or we will have disrespected it in the next 3 hours, as long as we close. Looking at the 4 hour, we can see here price is obviously pushed lower. That was yesterday's price action. Price pushed higher. We came back into this order block today for London session, and the rest is history. Price has just expanded to the upside. And as you can see on the 1 hour, you can quite clearly see lovely reaction inside this entire move to the downside, which actually ended up sweeping these lows right here. So really nice price action. I mean, in all honesty, and this is one of the setups, you could have generally been a player in here. If you use your fib levels, what can we see? You can see a couple of things. We can see that it literally came to our level, our 71% level. So that on its own is our kill zone. We've got the order block in there. We've got the imbalance in there. We've got the fibs right. We've got the target right here. Okay, so if you have taken this setup right at your level, stop loss come in here. To come to here would have been just over a 2-to-1 on a 1 hour time frame. Now, you might think, oh, that's not great risk reward, but listen, that's 2%. That's 2%. It's 2% you didn't have as well. So these trade setups happen a lot, and it's all by going from the higher time frame and down and so on. Now, obviously, that's the DXY. We can see how that's obviously panned out. Looking ahead to Euro, go back onto the daily. Obviously, when the DXY is bullish, you would expect Euro and all other majors to be working in the opposite direction. So as we can see here, don't stand there. As we can see here, price has been breaking lower to the downside. Okay, we can see here again, price pushed higher in this wick and then broke lower. So a lot of people, a lot of amateur traders probably would have thought at the start of the day that it looks bullish. Loads of stop losses would have happened, and then we can see price has traveled to the downside. And again, very similar to DXY, I'm going to be targeting this area right here. So that is my target. We've got a little bit further to go than we have on DXY, but there's no reason to say why we can't actually make that happen. I do think this is a realistic target. If we do accumulate in here and the DXY pushes above here and ends up distributing, I would look to take a buy on Euro using this as my bullish order block. And what it would be is a divergence between the DXY, because if the DXY travels higher and actually distributes like that to come lower, the DXY is the leading pair. If we get accumulation in here, respecting that order block, it's a very, very good sign that price is going to go bullish. So I would be looking for bullish moves despite these lows not being taken and the DXY highs being taken, because we've taken the highs on here. We don't have to take the highs on euro. I apologize if that's a little bit of information to get your head around, but all you need to know at this stage is the DXY is the leading asset. If it's taken liquidity and it's distributing and price is accumulating in here, that is a good sign for a buy. And likewise, if price does dip below here and accumulates, coming below these lows, but we actually get accumulation around here, respecting this level here, distribution, sorry, respecting this level here, I would still take this area here as a positive looking buy, in the mindset and the thought of we've taken these lows on euros, and the extra confluence that we've got is that we are respecting this area here on the DXY, and we're going to start moving lower. But it just looks like it's going to kind of play the other way around at the moment. That being said, obviously, if we do happen to take both sides anyway on here and on DXY, and we do accumulate, perfectly fine. It's just something to bear in mind. And that is why, ladies and gentlemen, the DXY is so, so vital, because this literally will help you with Euro USD, AUD USD, GBP USD, gold, all sorts of trades that you want to do. So make the DXY your best friend. Okay, so looking at what we did when we went a little bit lower, we can see we've obviously been moving lower and lower and lower. Now, how I broke down the analysis on London session earlier, and obviously we can see through hindsight that we have ended up playing out the way we thought we were going to. What we did, we measured this wick, because this is a very large wick. Okay, it's a very large wick. Now, when we measure this wick, I'm looking for 50%. Actually, was it on the daily that I measured it? Yeah, it was 50% of this daily wick. Because essentially, when you've got a daily candle and you see where is price going to go, this is a tiny candle compared to a large wick. So there's price action on a smaller time frame going on. So when we zoom in and I measure the entire wick, it gives us 50%. And all you have to do, you can do one or two things. You can keep the 50% level on the daily wick and just use that as your level, or you can examine a little bit further. So we can go to a smaller time frame. We can have a little look. Now, on the 4 hour, we can see here that price is obviously pushed up. It's only pushing into a wick at this stage. This line represents 50% of the daily wick. If we look to come a little bit lower, we can start to see a 3 hour candle. Coming even lower, we can see this 1 hour candle. So we're well within there now. And then we're starting to move price around a little bit more. We can see this entire move to the upside. And then we're just going to come a little bit lower until we see something we're pretty happy with. We've got a really nice 30-minute candle right there. We can see that price came into that 30-minute candle. Not that one. Right here. And if we go a little bit lower, we can see a 15-minute candle. And it actually, literally to the pip, look at that. Literally to the pip, came into that candle. And guys, if you don't believe me, the recording will be on there later on the website. This is pinpoint accuracy. 50% of this wick, inside and around 50% of the wick. What's close to it? This is the daily candle pushing higher. There's the candle, the order block. What else have we got to support it? We've got this liquidity grab right there. Now, I did, with news and things like that, I was thinking price could potentially come a little bit higher into these areas here. If I turn my indicator on quickly, actually, there was New York PM session. So we were looking here as well. And price obviously went above it. But ideally, we were looking for price to come way back into that area there. And hopefully, if you played along with it, you would have got yourself a really nice sell. Now, if you had have literally, you could have had your stop loss above here or even above here. If you're holding it to right now, you'd be up about 4%. If you were very aggressive with your stop loss, that's a 6%. If you had it down to there, that's almost a 10 to 1. So a 9 to 1 trade idea. Really, really clever move. But anyway, if you kind of missed that move, there possibly was potential to get in. We can see prices obviously started dumping to the downside. If we look at entry, a really nice 3-minute imbalance left there. Price came right back into that 3-minute area there. It actually provided quite a clean, well, not the cleanest of 2-minute areas. The 1 minute didn't look too clean. But here's the cool thing, you can be looking and following price down. So maybe the entry would have been in this imbalance here off that breaker block or off that area there, for example. You can start to see prices dump into the downside, and then you can clearly get a nice little picture of where it wants to go. But in all honesty, you could have easily entered off that 15-minute area there. So price obviously now has made its way lower and lower and lower. We got into New York PM session. This is where the news came in. It's the same intention, taking price lower, but we can see the news here on this candle. Bit of manipulation lower, taking out that low right there. Get a lot of people into the markets right here. Price takes that out, fills in this area of imbalance. Let's see a little bit higher, see if there's anything it's potentially gone for. So the 45-minute looks nice because look here, we can see that imbalance. And this is the thing, guys, when you are trading and there's news around, you have to be traveling around all the time frames just to see and understand why is it moving higher? Is it doing anything in particular? And it literally filled that imbalance and moved even lower. As of tomorrow, what would I look to try and do? Well, the first thing I think is we are still bearish because we've worked out the DXY is still currently pushing higher. It's definitely bound to retrace. So we're bound to start off with some bullish movement to the upside at any point. This is a key area. I'd definitely be looking at this area here. That's a nice 45-minute candle. It doesn't look as nice on the 1 hour, but the 45-minute candle looks quite nice. I like the look of this candle as well that it's created on the 30-minute time frame. And all you have to do is get to the charts tomorrow, London session, and have a little look, see what's happening. You can be potentially looking in here for a smaller time frame reaction to go lower. You can be looking up here. Maybe you set a pending order right here. You could have your stop there. You could have your stop there, really whatever you want. Now, we're only looking to target, let's say it creates, it's not taking out that low or wherever there, is it? So you could target that low there. That's a 5 to 1. So that could be a set as a pending order. Now, when you're watching price, maybe price comes into here and actually starts distributing on maybe a 3-minute time frame, a 5-minute time frame, a 1-minute time frame, whatever. If that starts happening, you can cancel that pending order and then enter in here. Something like that, maybe. And then that way you won't get in this order here. If this area doesn't work out, obviously you're going to be looking to take this setup right here, and you can just take it. Mate, if you're not confident, I said this to so many people, and I'll say it again, if you're not confident taking setups straight off the cuff from a higher time frame point of view, take it with a lower risk. Take it until you are super comfortable and you do not care about the loss. If you have to risk 0.10%, 0.1%, whatever, if you risk £10 of your account, whatever, if you're in a demo account, risk even lower. As long as you are emotionally comfortable with the stop loss, this could definitely play out. Because if you'd have taken it here today, it would have played out and you'd have been a good 5% up. And overall, this thing is incredibly bearish. And DXY is still incredibly bullish. So it's all about understanding where we're going, what we're up to, when the candle's going to give us that open. So midnight New York, we're going to find the candle. If we're obviously down here and we start pushing higher, it's going to suit us even more because we're going to want to sell above the open. So let's say opening price is around here, just as an example, where this red line is. You want to, price should start rallying higher and then obviously start coming lower. And if this is the opening price, just like that, you just draw that bit neater. So if price opens right here, travels higher, that's the manipulation we want. And then it ends up coming in even lower, just like that. Then suddenly you are using your power of 3 to the greatest of effects. And it will start to look something like that on a daily time frame. And you've used the open to justify where that is. And that's why I say you always want to sell above the open, because you want to get in on this wick if we're bearish for the day. Now, you might get it wrong and it might reverse to the upside, and it might end up us being particularly bullish for the day. If we're going to be bullish, I'll tell you now, what I would need to see happen is this 4-hour area has to break. If we get stopped out on this 4-hour area and price breaks above it, and we get a nice aggressive expansion above all these areas here, then I'm going to start looking at areas to buy to potentially go higher. And that day will come, and it may be on a day that you end up getting stopped out, but it is what it is. And we just follow price action all the way down. That is the only thing we're looking to do. You know, we've got these equal highs we've started to create. We've got this imbalance. We've got this candle here. There's plenty of reason for us to go higher, but at the moment, this looks to be where we are heading on euro. Is that the same candle? Well, yes, exactly the same, James, with the daily candle. Okay, so NAS, my favorite. I mentioned earlier on NAS that this daily candle, again, should be pretty bearish and that we were aiming for this liquidity. I said that I think this low will be hit before this high, but we obviously have got the high, which is going to eventually take us to this area here, and we've got this low. I think we're going to potentially come down here. Maybe we're going to mitigate into this area right here. So if we come into this area here and then we start seeing accumulation to the upside, then that would be really good, because we would end up taking that low, which essentially is liquidity. And then we could come a little bit lower into this area here to take price higher. And that would actually support the monthly time frame, because there's imbalance and a nice breaker block right there. And I will go over these terms as well if you're not too sure on what they are. But essentially, we can see here, where did price go? We had a little wick to the upside somewhere inside this candle. When we look at what happened, we can see here, this is, what day is it? This is the other week. So price is obviously pushing higher. We can see we're still very, very bearish. This is obviously news manipulation back into this candle here. So the fact that we came into this candle, broke to the downside, price pushing higher, coming down again, creating an inverse fair value gap, price action comes into the imbalance and the inverse that it created, supported as well by this order block here. We got more downside movement. Now, I mentioned at the very start of the week, I think, or the other day, I mentioned this imbalance is our target. And again, you can go on the Discord and you can check. That was the area that I called out. And I said I would be looking for sells in here. We got some nice sells in here. Obviously, this is the price action that ended up playing out. And we can see here clearly the price action has been making moves to the downside. So fast forward to today, we spoke about this area. I think we were around here. And the area we spoke about was this 15-minute area right here. And you can see clearly what happened. Price came into that 15-minute area. I was looking at this high. I will be honest. The only reason I was looking at this high is because that is a session high. That is liquidity from the New York PM session. And the only reason I thought that could be in trouble today was very simply because we had a high impact news day. So with the high impact news day, we can see that price is obviously pushing higher. We could get manipulation, price coming higher and then dropping, but we came in, respected the candle, respected this imbalance, and then dropped to the downside even lower. Now, in terms of New York session trading, I took a loss and I had a win. Okay, because what I was essentially looking at was the London session expansion. So this is the Asian session high right here. And then we obviously have the lows, which is obviously where we're looking to target, things like that. We clearly came down here. In fact, let me turn on the sessions indicator just to make things a little bit easier for you. So look here, London session pushes higher. We expand down for the rest of London session. Note, guys, that London session, this isn't all of London session. I'm using this as the London session kill zone. these boxes are times in which I would take my trades. Once they leave the boxes, I'm not too interested in taking trades unless I'm setting something on a higher time frame. But when I'm scalping and I'm doing these intraday moves, they're happening inside these kill zones and they're all set up there ready to go. Now, when London session expands to the downside like this, it is always a case, more often than not, we are getting price will come and respect London session. When London session doesn't move and we get consolidation, you usually get what's called a search and destroy situation. So New York session will take the high, the low, and then move in its intended direction. When Asian session does something like this, and London session ends up doing this, usually you get New York coming into an area in Asian session to then come lower, something like that. When London session drops like that, usually New York session will continue the trend. It will probably take out some form of liquidity and hopefully take out some form of liquidity and continue the trend. And that is exactly what we did today. You can see here, price action closed below New York PM session. So already there is a probable buy area happening right here. You can see here, PM session liquidity, Asian session lows taken, and we get accumulation right here. Now, I didn't take this only because I was overall bearish on a higher time frame, but this is actually a solid setup. And I'm going to go over this in another lesson, but essentially, when you come out of PM session liquidity, ignore the Asian range for a second here. When we close above or come above or below New York session liquidity, PM session liquidity, this range here, it accumulates and distributes usually. And that is when you can look for these models. And you can see it here on a 5-minute clear as day. Really nice buy setup. However, I was looking a little bit higher. I'm just going to get rid of this now, just so we can see the charts a little bit clearer. Just going to tidy this up. I was looking in this area here. So we can see we've obviously broken down. Now I'm looking for a nice clear part and side of imbalance. I can see the 30-minute imbalance right here. And this is literally, guys, trading with the higher time frames, trading in direction with the higher time frames. That's why I didn't take this buy situation down here, because overall I'm bearish. And don't get me wrong, I will take these setups. I'm not against taking them, just so everyone's clear on that. But I was just looking because of news. I wanted to be as sensible as possible. Now, we did have this liquidity here in the form of this imbalance. We also have this imbalance right here. So there's two areas of imbalance. You can clearly see price came into it and then dropped to the downside. Now, I was looking on smaller time frames. I was looking for price to eventually roll lower. There were a couple of manipulation moves which would have ended up stinging you if you would have tried to trade today. One of them was here. So nice break to the downside. You can see here, price action breaking lower. So many people get in there. You could get in there like that. You could have your stop here. It doesn't matter where you have it, essentially. And this is the target, or this is the target right here at this point. You can see there you're being stopped out of this. Okay, there's no way you're getting in this. Now, price ends up moving higher, even higher. And it's probably worth mentioning, actually, that if you look at the 15-minute time frame, the reaction was inside this imbalance, but not this imbalance. And when you've got high impact news, things like that, you end up getting the higher end of imbalance sort of targeted out. Now you can see here, price is moving higher, creating this imbalance right here. Price taps into the imbalance and then starts dumping to the downside. Now I was looking to try and take some kind of sell in there. As you can see, price action didn't actually end up giving me anything. And this is the trade I tried to do earlier, and it just didn't work. Okay, because, and this is, I shared this on the Discord just now. You can see here, it wasn't doing anything. Okay, so you would have missed out on it. But there's potential. Look, there's a setup right here. So if you're following it all the way down, just to that low, you can see there it's giving you a setup. And what I like about this area as well, it took that liquidity and then dumped. There was another sell in here. Where is it? Let me just turn this session on just to Here we go. AM session liquidity. That was the PM session. So what can we see here? Okay, more manipulation. Lovely amount of manipulation right there. And that came right into the London session, as we can see. Okay, so when price came into the London session, this is the PM session coming back in. You can go into a smaller time frame. Where is it? Here we go. And by the way, when you see this consolidation, you can see here it's quite choppy. That's because high impact news events are going on. So again, you can see here price action pushing higher. You get a couple of sell models here, and this is where it starts getting a little bit funky, because look how many possible entries you could sell and potentially get stopped out on. So you've got the 3 o'clock right there. This is the 5-minute entry, by the way, where when it took out the PM session liquidity, price pushes higher and then reacts to the downside. There's not actually a lot wrong with this particular sell model. Is it on a 2-minute? Wait for it to load. Yeah, so look there, we got a nice looking sell model in that imbalance. It would have really depended where you would have put your stop loss. Because if you entered off there, maybe you entered off the order block, you almost guaranteed you'd been stopped out due to your broker's spread. Or if you were aggressive like me, you'd have been stopped out. So that's fine. But we ended up moving from this area here. And you can clearly see, what can we see? Let me just turn that off. It's the one thing about the indicator. It's really good to kind of identify a few things. But once we're, once we're looking on the charts and you know where you are, it's obviously quite important to turn it off so you can see things clearly. Price pushes higher. It does take that high. So you would have been stopped out if you had a tight stop. If you had a bit of room, you would have been okay. Not really anything I see here at the moment. But what I notice is price pushing higher. Takes that area there, dumps to the downside, leaves this nice imbalance right here. Price literally taps into it right there. So you could be a seller right here. You can have your stop there. You can have your stop there, depending on where you want to take this thing. You could be targeting just that low there. If you want to be conservative, have it there for a 3-to-1. And that is just by waiting and letting price play itself out. And these setups, again, guys, they happen all the time. And it happened here again on the New York session. So we had to wait. You could see here, this was my missed entry right here. It was literally, I was just wanting to see price come into there. We had this area of support as well. I like the fact that we created this inverse area. Price came down. It just didn't tag me in. And that happens a lot. It's happened to me a lot lately as well. But we coming down, price comes into that area of imbalance right there and then dumps to the downside, creating a lovely fair value gap. You can enter off that. And that is more than enough evidence to understand that you are dropping. You just have to understand that you're looking for price. So if you took that sell there, it's all about targets. Be okay with just targeting there for a 1 to 2. You might sit there and think, yeah, but if I'd have chased it down, it would have been a 3-to-1. I don't care about that. Take the next low, a 2-to-1, that gives you 2% in the markets. If you're risking that, if you're risking 0.5%, you're up 1%, but you're up more than what you were before you took this setup. And that's the whole point. You're going to take more of these that win than you are the ones that lose. And that because what we're doing, we're looking for high quality setups, and that there is a very high quality setup. It actually played out just as we sent this Zoom call in. And that was before the Zoom call, and that's what I was looking in there, but it didn't happen, and that's fine. I'm happy to walk away because I know these areas play out all the time, and that's all I'm looking to see happen. Okay, so if I just kind of draw it out, when we are looking for price, we want that draw on liquidity. So if this here is London, so let's say Asian session has done that. So let's say, for example, we have taken the Asian session high right there, London session has. And let's say London session is moving to the downside like that. This could be a 5-minute time frame as an example. You want a draw on liquidity in New York session. So when we enter New York session, We want to see price come into an area. Let's say there is imbalance right here, for example. You can see areas of liquidity like there. And you can also see this liquidity right here. If price action in the New York session pushes to the upside, that is the rally, the fake rally in the open. Usually, price should respect this level, come above this liquidity. That is your drawn liquidity, and it should continue moving to the downside. So that is your New York session area, just like that. So that there is New York. This here London. And that can be Asian. So these are the ranges. All right. And this is what you look for. And this is obviously, I'm doing this on the example that we are on an expansion coming lower. And you're looking to get in somewhere around here. You want to make sure that this is somewhere in the premium levels. Premium levels right there. So that's the 50% and above. If we're in that premium level, we see that internal liquidity, we see this imbalance on a higher time frame. We can then start moving and looking ahead and seeing what's actually happening inside this area right here. So inside this area here, just do that down there. You can look for, because what will happen, it will look something like this, when it will see price pushing higher. And then essentially you're looking for a break of some kind of structure. You're looking for something like that. Now, if price action pushes higher, just zoom right in here. I've messed this up. Hang on. So if this price action, let's draw this over here, pushes higher and it creates some imbalance right there. And this is the inversion I'm talking about. A lot of people are going to be seeing that as imbalance, and they're going to be taking entries, not realizing where they are in relation to the higher time frame. So we wait, and we want that imbalance to get violated. Even if this area doesn't get taken, let's say it does in this instance, that then turns into an inverse fair value gap. So that is now a fair value gap that has not worked. If, and this is a bonus, if in the meantime, on this expansion down, we create a level of imbalance, preferably inside the inverse area right there, and we've got another nice little drawn liquidity just there and a break to the downside. Guys, let me tell you now, these entries, you take those entries and you just look for that. I promise you, you can get funding accounts, because this will probably give you like an 80% win rate. Even if it only gives you a 60%, a 50% win rate, if you are using proper risk management, you will be extremely successful. But these are, we're talking very high quality setups, very high quality setups. But let me explain what happens if you miss the entry. Okay, if you miss the entry, and what I mean by that is either you haven't taken it in. Let's say you took it, and you think, oh, rubbish, it's gone, it's gone. What do I do? Then let's say you are looking to try and track price down. Now, this is where you can obviously utilize these smaller time frames, because what you're going to end up happening, okay, is you're going to see price expands to the downside. Now, let's pretend this is a 5-minute move to the downside. Now, on the 5-minute move, it's probably going to create another area of imbalance. Even a 3-minute time frame. So we can then talk about this expansion right here. I'm going to change the color of that just to, because I don't want to confuse what's actually going on the higher stuff. So what we can see, we're focusing on this expansion to the downside. We can see we've reacted from our area. We clearly know we're bearish. We're talking about reacting from a higher time frame from London session. New York session is well and truly bearish. Just have that area here. Note the imbalance. You'll probably find some form of liquidity. So let's just move that down. You'll probably find some form of liquidity playing out, something like that. All I want you to do then is wait, because price will come back into this area right here. And once price ends up doing that, let me just change that. Right there. Once price ends up doing that on a 1 minute time frame, you get, because what's going to happen is price will then come up and then give you that expansion to the downside. And once that happens, you can identify your fair value gap. You can identify your, that's not the one I wanted, re-entry right here. You know, targeting new lows, whatever. And that is how you can get in, guys. That is how you can get in. And even better, if we get into this area here and there isn't, you know, there's another inverse, because there may have been imbalance or something like that. Let's say we've violated that, created a new one, reacted on a higher time frame imbalance. It's rinse and repeat. It is literally rinse and repeat. And this is all from working out from the higher time frame, working out our expansion, because we came in during New York session, which is right here, and we were able to work out that price action was going to be bearish today because we used London session's actions. That's why I prefer New York session, in all honesty. That's why I prefer New York session. And that, ladies and gentlemen, is how easy it can be. And it happened today, right here. Look here, we came into this imbalance. That is the AM New York AM session liquidity. Look, first London expansion, price comes into that imbalance. New York expansion in the morning session, PM session, price drives higher, comes into this area right here. Once we get into this area, look at that, perfect entry. Price doesn't hit us. We missed that opportunity right there. See that? You know, you stop here, here, wherever you want. It would have played out if it hit, really upsetting, whatever, that's fine. Look at this. Price comes in, hits this imbalance. Price dumps, leaves another area of imbalance. You've got two entries. You've got one there, you've got one there. And you can take that one and that one because we haven't hit this low yet. The second we hit this low, anything that happens in here is very unlikely, and it poses higher risk. So I'm not interested in these areas right here. The reason I'm not interested in those areas, we've taken the low, and you can see here already, price is starting to finish its day with random bits of rubbish consolidation. Probably finish up here somewhere. That is how I trade every single day. That is what I look for. This is my bread and butter setups. This is the stuff I do. Now, yes, there are other setups I'll try and utilize on higher time frames as well. And I am going to introduce you to those. Of course I am. But that right there is what I do during the New York session. That is my thinking. That is how I'm working. And it is 99.9% of it is waiting and being patient. And I cannot stress that enough. Being patient is literally the most important part of your trading journey. It's the most important part of your trading journey. I can't stress it enough, because sometimes these areas won't play out. And sometimes when New York session, when Asian session is doing something like that, London session's doing that, New York session's doing that, there really is just no trade. And usually that happens when there is no news whatsoever. And it's what it's doing. It's waiting for high impact news the next day, so price action can do its thing and start expand into the downside. And we look to get in on this area here in New York session or whatever. And likewise, if you're trading London session, you're waiting for the previous session, Asian session, or New York PM session to be taken. So you can still be just as profitable in the London session. It's just using previous sessions as information to get you guys going. Guys, do this, practice this, backtest this, because this works. This works, and it's an incredibly powerful tool. You know, it's taken me a few years to grasp it, but that's why I'm here sharing it with you now, because it's just beautiful. And it's price action that happens a lot. But you just have to understand the importance of patience, time, price, power of three. Them things is enough for you to catapult your trading careers to the next level. You will get, you know, funded accounts. You get multiple funded accounts. You can quit your day job. You can really take yourself to that level. It's just about being patient. And this is fractal, by the way. It happens on higher time frames as well, as mentioned and shown on EU here. Literally, this setup on EU right here, taking liquidity, dump into the downside, straight into our kill zone. That entry right there is a 9:30 in the morning entry. You could have gone to the charts in the morning. You could have set that area there as a pending. You could come back. Bear in mind, it's 7 o'clock now. Let's say you got back at 5:30. You'd be 4% in profit, even if you did not look at the charts all day. And you'd sit there and go, brilliant. There we go. And I know a lot of traders, a lot of very successful traders who trade this way. So there's two slices of the cake there. Higher time frame, lower time frame. And lower time frame will get you stopped out more. Higher time frame, you have to be a lot more patient, but both sets work. And I'm going to show you how they work, guys. I'm going to show you everything that I know on them. You know, I get things wrong. Of course I do. Of course I lose trades. I lost a trade today, but that was because it was a choppy day to trade. I said, don't trade. I ended up taking a few trades. I had smaller risk, but that's part of, you know, my experience in there as well. But if you're like a newbie, today is definitely not the day to trade. Despite beautiful setups being played out, it's just not the best day to trade. So questions, guys. Any questions at all? Would you just go through the daily candle power three? Yes, of course. So daily candle, what we like to use, I'll do it on this one here because I like 5 a.m. Well, I didn't make this up. Of course I didn't. I learned this. This was here, 5 a.m. So 5 a.m. is the New York algorithm. That is the candle open. And we want to get price. If you're looking to sell price, you want to sell price above the open. So you basically you can use the open of the candle to gauge where you are. So if we're bearish today, we want price to come higher. And as you can see, look, on the US 500 as well, we had this area here. We had this order block right here. So that there would have been a great looking sell. And it would have been above the candle. So when you get this New York midnight, which is 5 a.m. UK time, we want price to come above it if we're looking to sell. If we're looking to buy, so this would be a really nice place to buy if we get accumulation, because we can look to take price back into this price. If price does dump to the downside, you can see here we've got a really nice sell opportunity inside here during the New York PM session. You can see it came back to the New York opening price. So again, it just kind of proves that you can get some really nice opportunities. I mean, even there, the 2 minute was beautiful. Right there, that there is a sell in the peak of PM session. The 1 minute there playing out. You've got a 1 minute there, and the same one that we saw on US 100. See the same liquidity and everything. And you weren't actually, you know, above this, but we can see that we've used that to gauge direction. Does that mean the inverse value contains no inverse? So the inverse, so like an inverse is here, for example, and you can see here, if I actually replay. So people might look here and see, there's imbalance right there. And if they replay it, you can see there that we've started to where have we done it? Right. There we go. Perfect. So now we can see we've created an inverse because it's no longer working. Does that make sense? So that is now an inverse fair value gap. And you can see price came back in to that inverse to dump to the downside. Obviously, we had this imbalance as well that we created. I've done a lesson, guys, on inverse fair value gaps. It's in the course. So go watch it if you're struggling with that. If not, I will do more stuff on it as well as the course progresses for you guys. I guess I'm still having trouble with direction. I looked for EU buy. I looked for buys on EU because the 1 hour looked on the low range. I'm going to put my high time frame chart before and after. So you see, I think a little. Yeah, look. So yeah, I mean, for me, this was always pretty bearish today. I wasn't really anticipating anything else. I think for me, so Lonzo, all I'd be thinking at the moment, if this is going to start reversing, I'd wanna see a big move, like a big, like I'm talking like something like this in terms of moving to the upside. Like I want to see a clear big move to the upside. Because the thing is, right, if the 4 hour, just delete all of this here. This is a 4 hour time frame. People are so obsessed with getting in here, for example, and waiting for that. But what ends up happening is that. Now, if on a 4 hour time frame we smash higher, let's say you wake up the next day and this has happened. All right. On a smaller time frame, you're going to see stuff like this, maybe a 1 hour time frame. So all you have to do is just watch out for these areas. So look at that one, for example. You might come lower, disrespect that level, but actually you might get your buy in there. So you won't have to worry about right at the bottom because you've taken that area there, fine, but you've actually got price coming into this order block or something like that. And that's how you do it. Like here, for example, look, we clearly dumped to the downside here. So let's say you woke up and you were here, for example, London session, it's right there, London session. You think, oh my God, I've missed the move because it happened up there. Well, no, because we just wait for price to come back up to this level, like it did, and then drop. And then look, price never comes back to this level, but it takes this liquidity. And we got loads of nice sells to the downside. So no one really got any moves up there, if that makes sense. So I've got some charts here to look at. So yeah, you're looking in here. So this is the high, this is the low. So liquidity grab. So you're on a 15-minute time frame there. And clearly you've been, yeah, stop that. Yeah, you're just against the trend. That's all that is. You're literally just against that trend. No, I wouldn't, yeah, it's nothing. The thing is, look, you can see here, that's the high, that's the low. We want to see something like that broken. I can see, I know you're thinking with the liquidity sweep and all that, but yeah, we just want to make sure that's been taken. But yeah, so for me now, if I'm going to be bullish, I need to see big moves to the upside. Big moves to the upside. If we get them down here, then great. But I am going to be paying attention to the DXY. And look here, we're very close. There's a high chance we wake up tomorrow and these areas have been taken anyway, and then we'll reanalyze and see what's going on. But yeah, that's where I'm looking. Any questions, guys? So tonight has been a really good session, I think. I hope you all enjoyed yourself. I've enjoyed doing it. I've enjoyed helping you guys today. Hopefully this has been giving out some more golden nuggets. Hopefully you understand today's price action a little bit more. I'm getting a lot of feedback in here that says, yeah, need to work on higher timeframes. Guys, higher timeframes is the most important thing when you are analyzing your setups. Like higher timeframes, I cannot stress enough. Make sure you are trading in line, or at least are very fully aware of what is going on the higher timeframes. But guys, thank you very much for your help. Thank you for participating. And if you need anything, please feel free to let me know. I'm always there if anyone needs any help. And I will speak to you all very, very soon. Take care, guys. And I'll see you all on the next one.